In this video, I'm gonna be teaching my friend Hannah how to trade options in the stock market. And this is actually part 2. Are you excited?
I'm excited.
Grab your phone. You've got $500, so let's place this order. And at the end of this video, we'll see whether you're gonna lose money in your account or not. How has your trading been going so far? Have you been learning from my mentorship?
Yeah, the mentorship group is helping me a lot, especially like the tools that you made.
The risk management calculator.
Yeah.
So we were talking about that. I think today the plan is to essentially cover creating a trading plan. You've learned the setups. You've learned 2 on your own and 1 in part 1. So we're gonna go about finding a chart setup and then actually creating a trade plan and placing a trade and using my risk management calculator. So essentially connecting the first part and what you learned and continuing on. So if that sounds good, we'll hop on inside my computer and get started. All right, so what I'm gonna have you do first is we're actually gonna go through, we're gonna start with the NASDAQ 100 and we're gonna visually scan through a bunch of charts. And what I want you to do is try to identify a chart with one of the 3 setups that you learned. Obviously, we covered the all-time high pullback in the last video in part 1, but we've got the ATL bounce, we've got the pullback play. So let's first start by going through the NASDAQ 100. You want to identify whether the chart is bullish or bearish, and then you want to make sure that chart looks clean and clear, and then within that trend we'll look further if you think you see one of the setups, okay?
Yeah, so this chart is definitely bearish.
It's pretty choppy, and then there was this huge dramatic pullback, and that kind of just invalidated any like clean trend we had before.
I would not go for this one.
No, me neither. So the immediate trend, yeah, it's very choppy. Again, we're looking on the 4 hour, each candle's 4 hours over the last 180 days, and we just came off this low. So it looks like we are moving off of this all-time low on the chart back up, but the overall trend isn't necessarily bullish. It's really hard to identify the trend here on the 4 hour, looking at the bigger picture. Maybe in the short-term perspective.
Yeah, there it's bearish.
But again, like you said, it's a little choppy, so let's keep looking.
Yeah, so this one is not trading at the all-time high, so I would not go for that either.
Yeah, no, I agree. Okay, let's look at Tesla next.
That is hard to say. So at the end, it's definitely bearish. There too, but in the middle, there's like a...
You know, we were up here trading, came back down, made a low, made a high, back down, like, yeah, too messy. Let's go to the next one.
Yeah, this one looks better than the other ones, definitely. That is a bearish one, and it's a pullback.
Pullback play.
Pullback play.
One of the setups that you learn. Okay, yeah. Great.
Pullback awesome. Play was it? Yeah, right. Because here you can see the all-time low is by $12, and also the 15 days are respected. Yep. So that looks pretty clear to me.
Yeah.
I would maybe go for that.
I agree, 100%. Yep, overall trend is definitely bullish. 15-day is respected, all-time low just formed. So with the pullback play, which you just identified on this chart, we're gonna be looking to trade back down to that all-time low. So we're gonna look to essentially capitalize on this move right here. So the next step is going to be going about identifying our stop loss, which is where we're wrong, and our take profit, which is where we're gonna be right and where we're gonna make money. So we're gonna set those levels, and then based off of those, we're gonna go about choosing a set of option contracts, figuring out how much we're gonna make and lose, okay, based off of whether we hit our stop loss or take profit. And then we'll use my risk management calculator to tell us how much capital or what the position size should be for this specific trade. Now I'm gonna let you go ahead and decide where we're gonna be right, again, where we're gonna set our take profit based off of this setup and what you learned, and where we're gonna be wrong. So where we're gonna set our stop loss and where we're gonna essentially lose money if we're wrong on this trade.
Yeah, so we have here the all-time low. So that's also where we want to take our profit. So I'm gonna make a line here.
Yep.
And so we are hoping that this trend is going to the all-time low again, what I think it's gonna be, because it did that the whole time. And then we want to set a stop loss here. So if it's going up and it's not going down to where we want to have it, it stops us from losing too much money. So if it's going up, we're gonna lose a little bit of money, but not too much.
Exactly. Awesome. All right, so we've got our stop loss and take profit, and like visually, you know, we can make this green if we want, but you already know, but for everyone watching, that's where we're gonna be right, and this is where we're gonna be wrong. And now what we're gonna do is we're gonna take these levels. So this would be 1244 and 1423. We're gonna take those two numbers and we're gonna simulate this position. Okay, we're gonna essentially use a tool inside this trading platform, Thinkorswim, to tell us how much we're gonna make and how much we're gonna lose, okay, based off of the contracts, the option contracts we choose. And then we're gonna use, the tool, the risk management calculator, to help us really complete the entire trade plan. If you guys don't have Thinkorswim, you can use option profit calculator or another options profit calculator, which is essentially gonna do the same thing. But what we're gonna do here is we're gonna go to Analyze, and we're gonna go to Add Simulated Trade. Now, we've got our option contracts, we've got our expiration dates, and so we're gonna go about first choosing the expiration date we wanna go with, and then we're gonna choose the strike price and the exact contracts. Now, we obviously know this is a bearish setup because we're gonna be betting on this stock, Wolf, going down, so we're gonna buy puts. So let's go out to the September 20th contracts, okay? When we go to choose the option contract expiration, when we're swing trading, about a month to 2 months out is gonna be what we look to trade. So September 20th. And now we've got the options chain pulled up. Let's just go with the 15 puts, okay? You can look at the strike price, obviously puts on the right. We've got the 15 puts. We are going to essentially click buy, and you can see these contracts we just selected have pulled up. These are the Wolf, okay, that's the stock, betting on obviously going down. Wolf puts, these expire September 20th, and these are the $15 puts. Now, what we can do is we can adjust this. We're gonna just go based off of one contract. We're gonna do this math and see based off of that one contract how much we'd make or lose. And right now we can see these are going for around $340. Now we're gonna go to risk profile, and you can see under price slices, we've got two numbers here. We've got our take profit, which is gonna be 1251. So 1251 is our take profit. And then we've got our stop loss, which is gonna be 1423. So 1423. Take profit, stop loss, the one contract that we just chose that we want to buy. And we can see now the date. We want to choose a date to simulate this position, essentially saying by this date, if we hit our take profit or if we hit our stop loss by this date, how much are we going to make or lose? So remember, if we go back to the chart, we can use this other little tool that you have, which is the ADR calculator. And based off of your average hold period, let's say theoretically you hold your trades on average 5 days. Our 5-day projected move right there, we've already taken into account. Let's go drawing tools, and we're gonna pull out this trend line tool. We're gonna click and we're gonna drag down to our take profit. You can see 11.28%. That means we're sitting 11.28% away from our take profit. And that is within our 5-day projected move, which is 13%, right? Mm-hmm. If this, say, was 16% instead of 11, we probably wouldn't hit this take profit in the next 5 days. But based off of obviously the average daily movement over the last 180 days being 2.64, that means the 5-day projected move over the next 5 days, this is a very realistic move to happen, okay? 11% down to that target, and that is less than 13%. So that's good. We're gonna go back to Analyze, and we're gonna go 5 days out. So today is the 8th, Thursday. So today is 1 day, tomorrow is 2 days, and these are just gonna be trading days. The 12th, 3 days, the 13th, 4 days, and the 14th is gonna be 5 days. So we're gonna click on August 14th, okay? So you can see here. And now we can see under P&L open how much we're gonna make and how much we're gonna lose based off of this one contract. So what this is saying is that on August 14th, okay, based off of if we hit our take profit at 12.44, okay, roughly 12.44, we have 12.41, let's say 12.44, we'll make that little adjustment. Okay, 12.44, if we hit that area, we are gonna make $57.47 on this contract, which currently costs $340. And if we're wrong, if we go back, if we hit 14.23, well, we are going to lose $30.31. So, does that make sense?
Yeah, that makes sense.
We're gonna lose $58, and this is gonna be moving a bit because the market is open. Obviously, based off the price you get filled at, this is gonna change a bit. But we're saying if we can get in now, if we could buy one contract for $340 in 5 days, if we hit our stop loss, we're gonna lose $30. But if we hit our take profit, we're gonna make $58. Pretty cool. Okay, so next we're gonna pull up my risk management calculator. We're gonna put these numbers in, and that is going to tell us, well, whether or not we can take this trade. Okay, so this is the risk management calculator. We are under the position size calculator. So the asset value, okay? How much are these contracts? $340, right?
Yeah.
So 340, okay? What is our upside in dollars? How much are we gonna make if we are right?
$60.
60, it's moving. So $60, okay? We're gonna make $60. How much are we gonna lose if we're wrong?
28.44.
Okay, 28, we'll just round down. So $28. Now this is gonna be based off of your trade data. We're gonna start you out with the benchmark, which is gonna be 70%, your win rate being 70%. Now, obviously, as you trade more, as you gain more of your own trade data, you're gonna have that win rate based off of the way you're trading, but we're gonna start with 70% as like a benchmark. So 70% is our win rate. That means out of every 10 trades we take, 7 of those were hitting our take profit and 3 of those were hitting our stop loss. And then this also comes down to your personal trading, your average winner in percentage. On average, how much are you making each trade? Let's say 15%, okay? We're gonna go based off of the benchmark data that I give all my students. And then as far as our average loser, we're gonna say 10%. Now again, as you trade and as you progress, you'll start to collect this data, which is going to obviously alter the average winner, average loser, and win rate. But these 3 variables are based off of you and your trading. But because you're a new trader, I like starting everyone with these benchmark data or benchmark variables. And let's say for an account size, you have a $5,000 account, okay? Now again, that is gonna come down to how much you're trading with, but that is gonna be one of the big variables, obviously, when it comes to how we go about managing risk, if we should even put the trade on or not. And then our risk percentage, this is gonna be a user-defined variable because some people are riskier, some people are more conservative. Do you want to be, let's say, more conservative, kind of in the middle, or more risky?
I'm usually more conservative, but now that you're here and you can help a little bit, we can also be more risky.
Okay, I like it. Let's be a little more risky. Let's just say, let's start our RP or our risk percentage off at 50%. We can see all of a sudden we've got all these numbers here. What does this mean? What does this tell us? Well, first I want you to look at our risk scale, which you can see is 66.67%. We want that to be 100%. In order to correctly manage risk based off of our trading data, how we have traded in the past, or in this case, your benchmark data that you're starting with, and pertaining to the specific trade that we're looking to take, we want to obviously buy these contracts on Wolf, betting on Wolf going down. So if we look down here, we can see our position size, our downside percentage, our maximum purchase quantity, our risk to reward ratio, our break-even risk to reward ratio, and our break-even win rate. I know that's a lot, but what we want to focus on here is that the maximum purchase quantity is red. And so based off of these $340 contracts, we can essentially see that our position size, which is $267, we can't buy one contract. 267 is less than 340. So what the risk management calculator is telling us is we're just going to be exceeding risk. We should not put on this trade because whether it's for one reason or another, and I don't need to dive into the specifics of how this is all calculated, but we're going to be pushing risk beyond what we should based off of all these variables. If that was 100%, we would see the maximum purchase quantity being green. It would say 1 or it would say 2. And then you would obviously have that position size and you'd buy the amount of contracts you can. So what we could do in this case,
So we should take the risk down.
because of the trade, because of where we set our stop loss and where we set our take profit, we are kind of restricted. We either are going to have to go back to the chart and we're going to have to change where our stop loss is and where our take profit is. And we're going to have to minimize the amount of loss, or we're going to have to be more aggressive. We're going to have more capital. We're going to have a higher win rate. So there's a lot of variables that kind of come down to it. This doesn't mean you can't take the trade, but it means based off of the equation and the algorithm behind the calculator that you would be exceeding risk. So let's do this. Let's go back to the drawing board. Let's run another set of contracts and then we'll pop our numbers back in here and we'll see if we can take this trade. Okay?
Yeah.
So instead of going with the September contracts, we will go with the December contracts. 2 in the money would be the 16 strike. We're going to click on buy. And now we're just going to want to buy 1. Okay, we're going to go back to the risk profile. And we've got our 1423 stop loss and 1244 take profit. Realize how we're not changing our take profit and our stop loss. That's, you would be getting kind of stopped out right now because we didn't choose it was a very tight stop. So you'd already be getting stopped out. But what we could do is we could change this. So there's a lot, I think you're trying to see how many variables come into it. Obviously, we've got our stop loss and take profit. We've got this new set of contracts, but I'm thinking that the problem here is that your stop loss was a little too close to where we are currently trading. So let's go back to the chart and look at that. You can see we're already on our stop. So we didn't give ourselves enough room.
Yeah, so we can put a higher stop loss.
So why would we put a higher stop loss?
Because the trend could go up, could go a little bit more up, but then could go down.
Right. And we've talked about this. Yeah, the market likes to really probe these areas. We'll see that moving averages are broken just slightly. And then everyone that has their stop loss set right here gets shaken out. And then what will happen is the next day, this thing will end up pulling back. So knowing, okay, most people are going to be setting their stop loss right here, right on the 15-day. We're going to go back, we're going to readjust, we're going to bump our stop loss up to the next area of resistance, which would be at 1495. And this is going to be our new stop loss. Again, this is the work we're putting in before entering a trade. Okay, I know it's a lot, but as you do this more and more, this will become easier. So we've got our new stop loss here. I think I feel more confident in this stop loss, right? I think this thing is going to end up probing and then retracing, selling back off down to that low. The market's very hot. Wolf is up 12% on the day. So 1495, we're gonna go back to analyze 1495. And you wanna be careful to not try to justify taking a trade by, just going to a chart and adjusting the levels. I mean, there is either going to be a clear support or resistance level or not. We're going to use everything we've learned in the mentorship to make the best and most educated decision we can. And like we said, like we just covered, I think this is a smart area to set our take profit. This was too tight. Most people are going to have their stop set here, and you can see this thing is already pushing. So it wouldn't make sense. Go back to the Analyze tab. We've got our new stop loss at 1495. We've got our new contracts pulled up, which are further away. These expire in December, and they're a little further in the money. So we know those are going to be a little safer contracts as well. Okay, so now we can see our P&L open. How much are we going to lose if we're wrong?
Yeah, $52.
52. and we're gonna make 56 if we're right. Back to the drawing board. Our upside is going to be 56 and our downside is gonna be 52. It is moving a bit, okay? What happened? Now we're down to 33%. Why do you think that is?
I have no idea.
So it looks like what we've done is we've actually put on more risk. We've chosen a set of contracts and we've adjusted this level on our chart to the point where our risk to reward ratio is now red and we've dropped on the risk scale to 33%. So we've actually, in this case, you know, we've kind of negatively impacted our trade plan.
Yeah, so there's like a higher risk now because we can lose more money.
Yeah, we're gonna lose more money. That stop loss is way higher. And these contracts, apparently, they're gonna give us a 1 to 1.08 risk to reward. And remember before, we were at like a 1 to 2. So we're risking more money.
Yeah.
I mean, it's not necessarily good or bad. In this case, it's a bad thing, right? This risk management calculator is like, no, you can't take it. So at this point, what are we thinking?
Don't take that.
We don't take this trade and we either run through another set of contracts. I think we're just stuck with this stop loss. Like 14.95 is the only level at which we can be wrong based off of what we're looking at here. That's the only clear level at which we're wrong. And this is obviously the only clear place at which we're right. So now that means the only variable we can change are the contracts we buy. But at this point, we would have to go back to the chart, we'd have to hit the drawing board again, and we'd have to identify another opportunity. Did you expect that? For us to not find a trade to enter?
No.
I know.
I thought that this one was good.
I thought this one was good too, but you would either have to have different benchmark data, different historical figures. You would either have to find a different contract, you'd have to push your risk, or you'd have to trade with more money. All of those things are justifying a trade that at the end of the day, you simply should not take based off of where we're at right now, okay? So you see a lot of traders get in this position where they end up simply putting on trades they shouldn't be because they don't have the proper tools, resources, or knowledge. So I like to say it's very easy to make money trading and it's very hard to keep it. And this is one of the reasons it's very hard to keep it. Because if we had just gone ahead and put on this trade without doing our research, without figuring out what the risk was behind this trade, and based off of our trading, based off of what we are comfortable with risking and how much money we were trading with, whether or not that was a trade for us or not. Clearly, this is not a trade for us.
Too risky.
Too risky. Do you feel like you are now looking back on the first episode, number 1, when you entered that random trade in the beginning of the video, just buying some random contracts, having no idea why you were buying them, having no idea how much you would lose? Do you feel like you're in a way better place now to make a more educated decision and you're gonna be more confident in your trading?
Definitely, yes. I'm still learning, but yeah. I really like this risk calculator because it's basically telling me if it's risky or not to take it.
Exactly. That's awesome.
Yeah.
So you're feeling good? You're feeling confident?
Yeah.
Okay.
I definitely have to keep learning, but I feel so much more confident than last time.
Awesome. I mean, trading is a learning process and that's what you should be doing. It takes time. Trading isn't something that you want to get into and expect to make money overnight. It's going to take, as you know, a series of months. Some people it takes even years, but with a mentor, with help, with the right resources, you can definitely speed up that learning curve and you can start finding that success in the stock market. So any last words?
I'll definitely go back in the mentorship to learn more and improve and be more confident in taking the trades, but I feel a lot more confident than the first video.
Awesome. Okay, that's good. I'm glad to hear. I hope you guys feel the same. We hope you enjoyed. If you guys are interested in joining my mentorship and learning with Hannah, click the link in the description below. We'll help you out. We're here to learn together. Subscribe for more, and we'll see you all in the next video. Later.